Hi there, and welcome to the channel. If you're watching this, you're probably looking for car insurance, or at least wondering if you're paying too much. Well, you're not alone. Every year, thousands of people in the US and Canada lose money, not because they don't have insurance, but because they don't know how it works. In this video, I'm going to walk you through the basics of car insurance, how to choose the best plan for your needs in 2025, and 5 common mistakes people make when buying car insurance that can cost you a fortune. And we're going to do that through a real story, based on a mix of real experiences and what people wish they knew earlier. Let's get started. Meet Sarah, a 29-year-old teacher from Toronto. She just bought her first car, a used 2019 Honda Civic. Excited, she looked online and signed up for the cheapest insurance she could find, $65 a month. It was fast. It was easy. She thought, perfect. 3 months later, she had a minor accident. Nobody was hurt, but her front bumper was a mess. When she filed a claim, the insurance company denied it. Why? Because she had picked a liability-only policy, which doesn't cover damage to your own car. She had no idea. That mistake cost her nearly $2,500 in repairs.
Let's pause Sarah's story and go back to basics.
There are generally 3 main types of car insurance. 1. Liability insurance. This covers damage you cause to others, their car, property, or injuries. It does not cover your own car. 2. Collision insurance. This covers damage to your own car if you hit another vehicle or object. 3. Comprehensive insurance covers non-collision events like theft, fire, vandalism, falling objects, or even floods depending on the policy. Most states and provinces require liability insurance by law, but collision and comprehensive, optional. That's where most people make their first big mistake. They assume the cheapest option is the best, until they need it. So, how should Sarah have chosen her insurance? It comes down to 3 things. What's legally required in your state or province, the value of your car, your risk tolerance. If your car is older and not worth much, liability might be enough. But if it's relatively new or if you can't afford to pay for repairs yourself, then collision and comprehensive are smart choices. And here's the thing most people miss. You don't have to buy all coverage from the same company. Sometimes bundling home and auto saves you money. Other times, going with 2 different providers is cheaper. Let's get back to Sarah. After her claim was denied, she looked deeper into her policy. She discovered her deductible was $1,000. Her roadside assistance only covered 3 miles of towing. She wasn't covered for rental cars during repairs. All these small print details. She never noticed them when signing up. That brings us to mistake number 2, not reading the fine print. Always ask, what is the deductible? What is not covered? Are there limits to coverage distance or value? After the accident, Sarah decided to shop smarter. She got 3 quotes. She used an online comparison tool, and she spoke to a real agent to ask questions. Eventually, she found a policy for $85 per month that gave her full coverage, liability plus collision plus comprehensive, $500 deductible, free towing up to 25 miles, rental car coverage, not the cheapest but the most valuable for her situation. That brings us to mistake number 3, choosing based only on price. Sometimes, paying a little more up front can save you thousands down the line.
Here's something many people don't realize.
Your credit score affects your insurance rate, even though it has nothing to do with how you drive. In most U.S. states and some Canadian provinces, insurance companies legally use your credit score to estimate your risk. Sarah had a decent score, but when she improved it by just 30 points, her premium dropped by $12 a month. That's over $140 a year. This is mistake number 4, ignoring your credit score. If yours is low, work on improving it before you get quotes. 2 years later, Sarah's insurance company increased her premium by 18%. No accident, no claims, no reason. She called them, they said, it's just market adjustments. So she got new quotes and found a better deal with another company. This is mistake number 5, staying loyal for too long. Insurance companies often raise prices quietly over time. Review your policy every year. If it's gone up without reason, shop around. So let's recap.
Let's pause Sarah's story and go back to basics.
Your credit score affects
There are
your
generally
insurance rate,
three
even
main
though
types
it
of
has
car
nothing to do
insurance.
with how you drive.
1.
In most
Liability
U.S. states
insurance.
and some
This
Canadian
covers damage you
provinces,
cause to
insurance
others, their
companies
car,
legally
property,
use
or
your credit
injuries.
score to
It does
estimate
not
your
cover
risk.
your own car.
Sarah had a
2.
decent score, but when she
Collision
improved it by
insurance.
just
This
30
covers
points,
damage to
her
your own
premium
car
dropped
if
by
you hit
$12
another
a month.
vehicle or
That's
object.
over $140
3.
a year.
Comprehensive
This is mistake number
insurance
4,
covers
ignoring your credit
non-collision
score.
events like
If
theft,
yours is low,
fire,
work on
vandalism,
improving it
falling
before you get
objects,
quotes.
or even
2
floods
years
depending
later,
on the policy.
Sarah's insurance
Most
company
states
increased her
and
premium by
provinces require
18%.
liability
No
insurance by
accident,
law,
no claims,
but collision
no
and
reason.
comprehensive,
She called them, they said,
optional.
it's just market
That's where
adjustments.
most people
So
make
she
their
got new
first big
quotes
mistake.
and found a better
They
deal with
assume
another
the
company.
cheapest
This
option
is
is the
mistake number
best
5,
until they
staying
need it.
loyal for too long.
So,
Insurance
how should
companies
Sarah have
often
chosen
raise
her
prices
insurance?
quietly over time.
It comes down to
Review
3
your policy
things.
every year.
What's legally
gone up without
required in your
reason,
state or
shop
province?
around.
The
So let's
value
recap.
of your car.
Here's something many
your
people
risk
don't
tolerance.
realize. Your credit score
If your
affects
car is
your
older
insurance rate,
and not
even
worth
though
much,
it has nothing to do
liability
with how
might
you
be
drive.
enough.
In
But
most
if it's
U.S.
relatively
states and
new,
some Canadian
or if you
provinces,
can't afford
insurance
to pay
companies
for repairs
legally
yourself,
use your credit
then
score to
collision
estimate
and
your risk.
comprehensive
Sarah
are
had a
smart
decent
choices.
score, but when she improved
And
it by
here's the
just
thing
30
most people
points,
miss.
her premium
You
dropped
don't have
by
to buy all
$12 a
coverage
month.
from the same company.
That's over $140
Sometimes
a
bundling
year.
home and auto
This is
saves
mistake
you
number
money.
4,
Other
ignoring
times,
your
going
credit
with
score.
2 different
If
providers
yours is low,
cheaper.
work on
Let's get back
improving
to
it
Sarah.
before you get quotes.
After her claim
2
was
years later,
denied, she
Sarah's
looked
insurance
deeper into
company
her policy.
increased her premium
She
by
discovered
18%.
her deductible
No accident,
was
no claims,
$1,000.
no reason. She called
Her
them, they
roadside
said,
assistance
it's just
only
market
covered
adjustments.
3 miles of
So she
towing.
got new quotes
She wasn't
and
covered
found a better
for rental
deal with another
cars during
company.
repairs.
This is mistake
All
number 5,
these small print
staying loyal
details.
for too long.
She never noticed
Insurance
them when
companies
signing
often
up.
raise prices
That brings us
quietly
to
over
mistake
time.
number 2.
Review your
Not
policy
reading
every
the fine
year.
print.
If it's gone up without
Always
reason,
ask,
shop around.
what is the deductible?
So let's recap.
What is not
Here's
covered?
something many people don't
Are there
realize.
limits to coverage,
Your credit
distance,
score
or
affects
value?
your insurance
After
rate,
the accident,
even though
Sarah
it has
decided
nothing to
shop
do with how
smarter.
you drive.
She got 3
In
quotes.
most U.S.
She
states and
used
some
an
Canadian
online
provinces,
comparison tool,
insurance
and
companies
she spoke
legally
to a
use
real
your credit
agent
score
to ask
to estimate your
questions.
risk.
Eventually,
Sarah had a
she
decent
found
score,
a policy
but when she
for
improved it by just
$85
30
per month
points,
that gave
her
her
premium
full
dropped by
coverage.
$12